What should one expect out of such a fund?
So the positioning of the product is more towards the, as I said, a hybrid kind of category where you have a dynamic asset allocation fund, where you have an aggressive hybrid fund. If you see the dynamic asset allocation fund, they move the equity levels from 30 to 60. You see aggressive hybrid where there is an minimum debt element which is there, and they keep the equity around 70-75%. So this kind of product will have that debt element also and have that equity flexibility in terms of moving from minus 25 to 75, right? So it gives you that product which has both the dynamic equity allocation as well as the asset allocation in terms of the debt part. So the three layers here are, as I said, the asset allocation part, a traditional portfolio which we have read in finance that you need to have a 60% equity and a 40% debt. So this kind of product allows you to have a 25 to 35% active debt, which will give you a fixed return. And the second part is the equity allocation. Equity allocation is like you can move the equity allocation based on the risks of the market from minus 25 to 75. And if you do all that, your stock selection will take care of the upside and your equity and asset allocation will take care of the downside. And as a result, if you look over the entire market cycle, you will see that you are getting a much better risk-adjusted returns in this kind of a product.
Investments in Specialized Investment Fund involves relatively high risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.